I became profitable by trading dumber, and since then this dumb process also helped dozens of other traders go from losing to funded. It all comes down to 5 lessons I learned the hard way. Starting with the first, you must avoid complexity, because here is what actually happens when your strategy is complex and money is on the line. You see a potential setup. Rule 1, check. Rule 2, check. Rule 3, wait, is that actually lining up? Decision fatigue starts to kick in. By the time you get to rule 8, the setup is already gone, or you took it anyway even though half of the conditions were a maybe. And this happens every single trade. Every single day. And the problem isn't that you are not smart enough to follow 10 rules. The problem is that under pressure your brain literally can't process 10 variables. There is a Nobel Prize winning research behind this. It's called confirmation bias, and it proves that your brain doesn't process information objectively. It processes it selectively. It finds the evidence that confirms what you already want to believe. So if you want to take the trade, your brain will find all the reasons why it's a perfect setup, and if you are scared, it finds all the reasons why it's not. This is why you need to be extremely careful when backtesting. If you already seen what's happened on the chart, your brain will find the reason to not take a loss and to take a win. This will lead to totally flawed backtest data, which will lead to unrealistic expectations, which will lead to overconfidence, and then crying over your blown funded account. Been there, done that. But blowing accounts isn't even the worst part. With 10 subjective rules, there is always a way to justify any decision you make. So you will never know if you lost because the strategy had a losing trade, or you lost because you made a mistake. And on demo, this is not a big deal, but I can promise you, when there is thousands of dollars on the line, this will eat you up. So here is how I ended this mental torture in 2 steps. Step 1, simplifying everything. You are looking for a system so simple that a 10-year-old could execute it without making a mistake. Step 2, fixing every single rule, so it's binary. You can check it by asking yourself, if I would take 10k trades, would I take the same ones every time? But even a simple strategy will fail you if you look at the market through 3 different lenses at once. Everyone tells you to do top-down analysis, higher time frame for bias, lower time frame for entry. Well, I did that for years, until I figured out it's basically the same as setting my money and my time on fire. Because here is what happens when you trade multiple time frames. You are on the 50-minute, the setup looks good. You go to the 1 hour for confirmation, now it's saying the opposite. You go to the 4 hour, that's saying something different again. It's like trying to drive a car with 3 different GPS apps open at the same time. One tells you to go left, the second one says to go right, and the third one tells you to make a U-turn. If you listen to all of them, you are just going to sit in the middle of the road like an idiot while everyone else drives past you. If you listen to one of them, you will always have it in the back in your mind. Did I make the right choice? Especially if you will be late at the end and you will get fired. So what do you do with all of these time frames? You either freeze or you pick the time frame that confirms what you already want to do, which is confirmation bias again, which we just talked about. And the worst part is now you have infinite ways to justify any trade you take, and infinite ways to talk yourself out of any trade you don't want to take, because one time frame will always tell the story that you want. So I deleted every time frame except one. And what happened? My trade volume went up massively because I wasn't cutting half of my setups based on a higher time frame that said no. My chart time dropped because I wasn't jumping between 3 screens. And my confidence in each trade went up because I had one clear answer. Either the setup is there or it isn't. But simplifying your screen is only half of the battle. The real disaster happens once you start trading offensively instead of defensively. Most traders think the goal is to maximize returns. Squeeze out every single dollar out of every trade. Go as high as you can on risk. And I thought the same thing until I lost a few prop firm accounts. Let's say you risk 1% per trade. You hit a losing streak of 7, which is completely normal. You have 3% left on your prop firm account, and if you're not mentally prepared for that, you start making emotional decisions. You cut positions early, you skip setups, you lower your risk because you are scared, or you revenge trade to get it back. And the moment you start doing any of those things, you are no longer trading your edge. But here is what makes it even worse. You spend months passing an evaluation dreaming about the payouts. You finally get that funded account in your hands, and then one bad week happens. That 7% drawdown doesn't just feel like a number on a screen. It feels like your entire future is slipping away. Your heart rate spikes every time you open MT4. You are checking the charts at 3 AM. And this is the trap. The higher you aim for returns, the thinner your psychological floor becomes. It's like trying to dive 30 meters deep while holding your breath. If you can only reach 20 meters, even though that's an insane achievement, it means you failed. If you aim for 10% a month but only make 5%, which is literally the top 0.1% of traders if not less, you will be pushing for that 10% regardless. And just like that, you turn a world-class result into an endless cycle of overtrading. So here is how I fixed this. I dropped my risk to a level where a 10 trade losing streak wouldn't keep me up at night. Not the maximum I could handle, the minimum I needed to stay consistent. But even with the perfect risk, most traders still sabotage themselves by trying to optimize their strategy. I used to think increasing my win rate equals more money, but I was completely wrong. Because how do we get more win rate? By filtering our trades better, meaning adding more conditions to our entry. But filtering your trades better will most likely make you less money. Here is why. Let's say you have a simple strategy, 45% win rate, 2 risk reward on average, 20 trades a month. Your monthly return, 7 R per month. Now you add 3 more confirmations. Win rate goes up to 55%. Sounds amazing. But now you're only gonna get 8 trades a month because the setups are much rarer. Your monthly expectancy, 5.2 R per month. You made your strategy better and made less money. But it gets worse, because with 20-30 trades, your edge plays out relatively fast. But with only 8 setups, a single losing streak can wipe out your entire month or even 2. You are suddenly dealing with massive variance. And this is where the mental breakdown happens, because you have so few opportunities, every single trade starts to feel like life or death. You start overthinking, you start hesitating, and before you know it, you missed out on the winning trades that would have got you out of the drawdown. So when I tried to improve my strategy, I stopped asking what can I add and start asking what can I remove without hurting my edge. Because simple doesn't just feel better, it is better mathematically. But the hardest thing to remove from the chart isn't a few rules, it's yourself. For years, I thought my job as a trader was to be smart, to read the market, to find the perfect entry. And that belief was why I kept hovering around break-even, even though I had the knowledge to make profits. Here is what nobody wants to hear. Your opinion doesn't matter. Your mood doesn't matter. Your feelings about a trade don't matter. And the traders who accept this, they stopped trying to outsmart a 7 trillion a day market and just started following the plan. Boring, mechanical, robotic execution. But the traders who didn't accept it, they kept tweaking, kept adding their own read on the market. And every time they did that, they deviated from the edge. And here's the dangerous part. Sometimes it worked. And when it worked, their brain said, see, I am the edge. My instincts are valuable. And that made it worse because now they had proof that following their feelings was good. But over hundreds of trades, the deviations don't work out. And slowly you stop trading a strategy and you start trading your ego. So I needed to accept I am not the edge. The strategy is the edge. My job is to execute it as cleanly as possible and then get out of the way. So to sum this up, trade number, simplify more, risk less, execute like a robot. And if you want to make sure none of this falls apart once you see other shiny strategy video, this video is your next step.